Hello, ladies and gentlemen, folks and folkaroons, traders and traderettes. This is Dr. Greg McLeod from Elite Traders University, and it's so good to be with you here on this Friday. This is the November 17th, 2023. So good to be with you here for Bulls versus Bears, the weekly Forex forecast. And boy, did we have a fantastic trading week. I hope you had a great week as well. Looking forward to the weekend here in Las Vegas. We have the Formula One race coming to town, and that's going to be very interesting. We saw big moves in the indices as we continue to power forward in this big November pre-Christmas rally. Inflation data was softer in the U.S., and that had led to indices rallying, and also talk of the Fed not only pausing but actually cutting rates in 2024. So we're going to talk more about that. FOMC minutes are going to tell us a more detailed picture about what they think about the upcoming rate picture and the state of inflation in the United States. Okay, so we're going to get started in just a few minutes. Let me go ahead and direct your attention to my screen. Let me go ahead and share with you. And let's go ahead and get started with Bulls versus Bears, the weekly Forex forecast. Awesome. And let's get to it. And this is brought to you by Elite Traders University. Elite Traders University is my company, education company, which helps traders become professional traders in 90 days or less using my proprietary Pip N Run trading system. And we have a 3-step approach to help traders become professional traders in 90 days. And so let's go ahead and get right to it. View, and let's make it look nice and clean here. All right, Elite Traders University, Bulls versus Bears. Here we go. Weekly Forex forecast, and this is for this week, for this week beginning 11/18, all right, 11/19, right? Okay. So before we get started, I want to direct your attention to risk disclosure. Direct your attention to risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I'll be looking at hypothetical results, and these are just my opinions, and for educational purposes only. No trade advice is given. Consult with your professional, trading professional, financial advisor for any type of help that you may need. Okay, I've been doing this for almost 30 years. I trade everything for stocks, options, crypto, and commodities, options, Forex. I'm one of the world's foremost authorities in short-term day trading, known as scalping. Scalping is a way of taking repeated profits in the market over and over again in a matter of minutes and even seconds. And that's how we can compound profits over time, a short amount of time. Especially if you're a trader and you're an older trader, you may not have another 25 years to compound your account, and buying and holding is not what you want to do. Then you want to check out Elite Traders University. Okay. Our agenda for today, we're going to look at the dollar index, the euro, pound, Aussie, the major currency pairs. We're also going to focus on gold, because I am writing a new book on gold, the Gold Rush Blueprint. And we're going to have a class. We have classes. We've already did a pre-sale, phenomenal pre-sale that we've sold out. So we don't have any spots left. And we're going to have the actual classes in December, but we're doing our pre-launch orientation on Saturday at 12 p.m. for those of you who are watching. Make sure you check your email for the invitation to the live stream. Okay, make sure you check your junk mail and your spam folder. You may not see it in your normal inbox. Okay, so a lot of times our emails may go to your junk mail or spam folder. So if you've already enrolled and you've taken advantage of the pre-sale and you're already a founding member, make sure you check your junk mail and spam folder if you do not have an invitation by tonight. Okay. We're going to also check on the S&P 500, but we're going to start with economic news. And my favorite tool that I like using is my market heat map. My market heat maps and arrangement of currency do not have an invitation by tonight. Okay. By percentage change, it tells us what's hopping, what's popping, and what's dropping, and what's not in the market. But it's not only that, it's like a Swiss Army knife, which allows me a one-stop shop of having all my tools right in the front. Go to mymarketheatmap.com. You can experience one of the 6 powerful heat maps. These tiles move and fluctuate along with, based on the average daily movement of the currency. They change colors: green in an uptrend, red in a downtrend, and gray stay away. Right now, it's Friday. It's about 11:33 p.m. On the East Coast here, and we can just go right to the front page, and we're going to check out the economic calendar. If it's a little sticky, we just gonna have to refresh the screen and click show more, and we're gonna go right into the economic calendar. The economic calendar is my secret to finding the most profitable trades on the market. The big boys are trading news. They are looking at the news is actually driving currencies. It's what causes people to be interested to take positions in the market. And so this is my, I call it fund with flags. We can look at the flag and look at what will be in play for the coming week. To be a successful trader, it's very important to know what to trade as well as when to trade and how to trade it. And so the economic calendar takes care of that by showing you what people are looking at trading. For instance, we were looking at the euro because they had inflation data. And so even though we weren't trading exactly at that time, we waited for a few minutes and were able to get a lot of pips on the euro because their inflation data came out in line, actually a little bit lower, and we saw the euro actually go up. Okay. So there was lots of great volatility in the euro because of this news. So we're going to start off with Monday, November 20th at 1:45 p.m. We're looking at the Bank of England Governor Bailey's speech. And so that's coming out then. And then right after that, there's not much data coming out for Monday. 7:30 p.m., we're going to have the RBA meeting minutes. The minutes of the meeting tell us what the Reserve Bank of Australia, that's their central bank, tells us what they are actually thinking as far as monetary policy. And so usually the currency, the Australian dollar, and the Australian currency pairs like Aussie CAD, Aussie Yen, Aussie Swiss will move when these guys are actually talking about the Australian dollar. Okay, so that will be a currency we want to take a look at. Now on Tuesday, this is big. This is, look what I see. I see maple leaves, right? This is the Canadian flag. It has a maple leaf in the center. It's red. 8:30 a.m. Eastern time. We're looking at lots of inflation data, and a lot of people are watching inflation data because it determines interest rates and currency values. In fact, interest rates are the biggest drivers of currency fluctuations. So paying attention and knowing what's going on tells us that, hey, we should look at the Canadian dollar to trade. And we might not want to trade the Swiss franc because there's no Swiss flag here. So it's very simple. Canada flag, Canadian flag, we want to trade the Canadian dollar or one of the Canadian pairs like CAD Yen or CAD Swiss or dollar CAD, right? So if you're saying, oh, I'm trading Euro Kiwi and nothing's going on, well, you're in the wrong currency, right? The economic calendar controls what's being traded and where the most volume is going to be. We need volume, we need volatility, we need the 2 V's. We don't have those, then we are in a dead market and it's not going to move, okay? So moving right along we have the core inflation rate month on month. We look at a rise from negative 0.1 to 0.1%, okay? And then the MOM stands for month on month. We're comparing one month to another month. So we're comparing September to October. Then we have CAD CPI, which stands for Consumer Price Index Trend Mean Year on Year. YOY stands for year. Compare 1 year to another year. We're looking at a drop from 3.7% to 3.4%. And then the inflation rate year on year, we're looking at a drop from 3.8% to 3.2%. Core inflation rate year on year dropped from 2.8% to 2.6%. Inflation rate month on month actually a rise from 0.1% to 0.1%. And CPI median year on year, looking at a drop from 3.8% to 3.5%. So overall, we're seeing some softer numbers out of Canada, and so that could put pressure on the Canadian dollar. And so we can actually see the Canadian dollar will start to drop. Okay, but we'll look at the markets, because sometimes bad news is good news and good news is bad news. So we're going to check the charts. It's going to be something on our radar to actually look at to trade, because even though we may not know the fundamentals of how these numbers are actually going to impact, because it's not straight science, we can look at the chart patterns and we can look at other things, the technicals, to actually give us an idea of where this is going. We're going to be fishing in the right pond, but we're going to use the technicals to actually show us which direction it wants to go. Okay, so let's move it along to now later on at 2 p.m. we have a U.S. flag. So that's FOMC minutes, and this is when we look at what Chairman Powell and the other Fed governors are looking at, why they kept rates unchanged, and does this the softening economic data out of the U.S. Necessitates a cut in interest rates and policy. Okay, so we'll see that, because we do have a hike, our interest rate decision coming up for December, and so that could really impact how the equity markets and the other currencies fare going into 2024. Okay, let's move on to Wednesday, November 22nd. Remember, we're going into Thanksgiving week as well. And so we're going to, the U.S. is going to be offline. And so you're going to see, make sure you're careful when you're trading, because usually we're going to have lower liquidity because of people taking off for Thanksgiving, maybe taking off early, which means we have wider spreads, more volatile price movements, and you may get bad fills or slippage. Usually in liquid holiday markets, we have there's opportunities for a great deal of profit, but there's also a lot of risk involved. So trade small, trade accordingly, and be careful out there. So going into Wednesday, we have the UK autumn statement. Not much information on that, but then we have USD. We have initial jobless claims. Jobless claims supposed to drop from 231,000 to 225,000. Good news is bad news. So the low reduction in jobless claims may be negative for the other current for the stock market, probably positive for the dollar. Okay, and the reason why is if they think that if the employment numbers are growing and the economy is getting too hot, then they have to raise rates. Okay, so it's one of those things where bad news is good news and good news is bad news. So this will be bad news for indices, bad news for the general market if we have a lower number. This is a very volatile number. It changes. Weekly jobless claims will change, weekly. But the market has been placing a lot of weight on these numbers because how Fed Chairman Powell has said that the Fed is data dependent, which means they're going to be watching data, and means that traders are watching the data as well. At 10 a.m., the 10 a.m. news cycle of Michigan consumer sentiment final, and consumer sentiment is like, how do they feel about going shopping? Do they feel good or feel bad? Right. And so it looks like it's dropping from 63.8 to 60.5. If they feel bad, then the Fed will probably say, okay, that's good. We want them to feel bad. We don't want them to buy anything. If they don't buy anything, prices go down, inflation solved, right? This is their theory. So good news is bad news. Bad news is good news. So if this is bad, we could see rally in the risk on currencies or rally in the stock market. And so this is what we're looking at. 60.5 is a big drop. maybe people running out of savings and maxing out credit cards and losing their jobs and layoffs. This is what the Fed wants to see. Okay. 11:45 a.m. We have Bank of Canada Governor Macron is going to speak, and that could possibly give some residual movement in the Canadian dollar. Now, Thursday, happy Thanksgiving. We're not going to see any, you notice there's no U.S. news. And so it's a very liquid market. Europe will be open because Europe doesn't celebrate Thanksgiving. It's a U.S. holiday. So Europe will be open. But again, we'll have dramatically lower volumes, lower trade volumes, and that could create opportunities as well as challenges, because if there's not a lot of people trading, then you're going to see a lot of gaps and irregular price movement, or it could just be dead in the water and not move, because the Europeans might say, hey, if those Yanks aren't trading, we're not trading either, and they may take off too. So you may be, instead of maybe talking to Uncle Fred or something like that, you could actually, you think you're going to stare at the charts, better off watching the Lions football game, right? Go Lions, right? So we have HCOB manufacturing PMI flash 43 on 42.8, and HCOB services PMI flash 45.6, 45.2. We're looking at a slight rise, and then we're looking at that as French data. We're going to go to German data at 3:30. HCOB manufacturing PMI flash rise from 40.8 to 41.2. And then the HCOB Federal Services PMI flash rise from 48.2 to 48.5. And then we'll finish up with the UK data. On Thursday, we have the S&P Global CIPS Composite PMI Purchasing Managers Index flash unchanged at 48.7. It's going to be a non-event. And then the service PMI flash is going to come in at the same. It's like no one decided to forecast anything different. 49.5. We're going to see a slight rise in manufacturing PMI from 44.8 to 45. Right. And moving right along to Friday, we have German GDP growth rate year-on-year final. Again, it's going to impact the euro. A drop from 0 to negative 0.3. This is probably what people are, maybe across the pond. They are also looking at bad news being good news too. And we could see a continual rally based on that. 0.1% growth rate quarter-on-quarter was the previous number, a drop to negative 0.1%. As the ECB continues to hike rates as well, that's slowing down the economy, lowering inflation, which could be very positive for the European stock markets and also the European currencies. IFO business climate is supposed to actually rise from 86.9 to 87.5. Good news may be bad news, so there we go, right? So it's a little like a cat and mouse game of good news versus bad news. And then we go right down to we have some U.S. data coming in Friday. I'm sure it's a shortened week for many people as Thanksgiving happened Friday after, Black Friday, people shopping late, probably more, we might have some lower liquidity as well. So again, be careful out there. We have the S&P Global Composite PMI flash, a drop from 50.7 to 50.6. Bad news is good news. We could see a rise in risk assets. And then services PMI dropped from 50.6 to 50.3. And manufacturing PMI dropped from 50 to 49.8. And then that's it. That'll be it for the data for this week. Again, it's a Thanksgiving week. And so, we might, and also an FOMC week. Sometimes during FOMC, the minutes that are on at 2 p.m., the market might be flat until 2. So we might want to, even though we have a lot of Canada data, the rest of the market may be dead going into this meeting. Very important because it might give us an indication of whether the Fed has, are they going to end their rate hike cycle, and maybe they may even start talking about cutting. Okay, so let's go ahead and get into the technicals. I know that's where you guys are like, Greg, can you get us to the technicals, please? Yes, and I will get you there let me take you there. We're gonna get to the technicals. And let me go ahead and remove all the indicators here. We'll start with a clean chart, start with a weekly, and we're going to always start with the dollar index. Dollar index is, is a basket of currencies versus the US dollar. And we can see, look at this giant move, this bearish engulfing candle, just stick sandwich, just rejection area. And that's why I had talked about the last area that we were in this range, locked in this range, and we're looking for a break. And though many people are maybe looking for a retest of the old high, 114.99, we got a rejection. We had this sideways weekly, week after week, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. And then we finally broke down below, rallied back inside, and then dropped. So we got this stick sandwich. A stick sandwich, you get 2 slices of bread with a green piece of meat in between. And so that's a pretty bearish candlestick pattern right there. And so this is what we're looking for was either one or two things was going to happen. That we break the high and maybe head back to new highs. But with the softer economic data and the Fed and we see the Treasury yields actually dropping. We'll go actually take a look at the 10-year Treasury yield, and you can see how it dropped, and then the dollar dropped with it. We broke, right? So now we're actually looking at maybe a retest of these old lows here at 100. The figure, what these lows that we had back on April 10th or so. We had a little fake break to the south side, and then I'll move back to the upside. Okay, so looks like we can continue to move down. However, after a big move like that, usually we get a little bit of a retrace, a little comeback, and return to the scene of the crime. So we may look at some type of profit taking. Congratulations for the dollar shorts. But we usually see a little bit of a retest, so I see short-term bullish, medium-term to long-term lower, right? So we can look at our daily chart, and we can see how we've been walking down sideways, broke out, retest inside, and then now we have lower lows and lower highs, and now we have a structural downtrend, lower. We have a swing high, a lower high than the previous high, a lower high than the previous high, a lower high than the previous high, and lower lows stacking down. So this indicates that we have maybe a trend reversal, right? But we stopped at a Fibonacci area already. We've got down, we get 50% retracement actions at 103.43, and we didn't tag it, hung around the 38, blew the 38 apart, came back, retested it, and then dropped. So maybe we can come back down to 103.39 and test this. But looks like we are making these lower highs. The way we validate this, if we broke the high, maybe we broke 106 and kept going, but looks like we could keep going, right? Dollar softness, dollar weakness, things that and we can look at the I'm looking at very short-term bullish, like I'm talking about okay. And remove all drawings, remove all indicators, and back to my weekly. And okay, there we go. So, let's move on to the euro. EURUSD, right? Let's look at the euro. And so we remove all drawings, right? And look at our weekly. And we can see that we hit that area, that decision points, right, was a 38% retracement, right? And also this old low back here from March 13th. and we got a little bit lower, and then now we're bouncing up, and we are have a nascent uptrend, higher highs, higher lows, right? So we're just walking this new trend in the opposite direction of the US dollar, and we may after this big surge. I mean, this is a huge move from the lows of 104 to a high of like 109, right? 109.18. And so we might see a little bit of a pullback. So short-term bearish. Short-term, I'm talking about maybe a day, a couple of days of bearishness. And then we can see a rocket move back up toward the old high of 112, right? And beyond, right? As the dollar continues to soften. In fact, we could probably see the euro, head back toward the 123.19 area, right? So bulls versus bears. Euro, we are bullish on the euro. Okay, it looks like we have some pound, some UK data coming out. GBP USD. You want to take a look at that. And we have some Aussie data too. Basically the same pattern. If we look at a weekly chart, they basically turned, a nice weekly entry, trend line break, color change. I mean, that's it right there, right? And then we maybe look for first target 31.44. As long as we can hold the lows here, hold that those October 2nd lows of the 120.47 area. If we can hold that, then we've got a good shot back at the old high. And if we don't want to be greedy, take about half, see if we can get back halfway up, maybe to the like 127 area, right? And see if we can ride that out for the holidays. Usually we have these November rallies, and for the past 5 years, the only year was 2021. We had a negative November rally, but the pound rallies in the same direction as the S&P, the NASDAQ. So if you hear the S&P is up, NASDAQ's up, think, oh, pound is up, oh, euro's up, oh, Aussie's up, oh, New Zealand dollar's up. Okay, there is a very positive correlation to that. Again, and let me show you. It uses plus sign the correlation, right? And we can put the NASDAQ 100. We can put the US 30. We can put the S&P 500, SPX 500. We can put those up, right? And we can see that they dip. See the dip, pound made the dip, these made the dip, and then these are moving up and these are moving up. And right, so now let's put up Aussie dollar, AUD, USD, right? We put that up there too, right? And then we go ahead and put it NZD, USD. You put that up there as well, right? What else has the front thing on the EURUSD, right? So this is risk on, guys. These are all, they move in the same direction, right? And then see dollar CAD, dollar Swiss, dollar yen does its own thing. But see, that's why when you hear, you may not, if you listen to the news, everybody talks about the S&P 500. S&P 500, blah, 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 and then that's blah, 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 right? But you said, I don't trade that. I trade the euro. Well, they are joined at the hip, right? In fact, one leads a little bit to the, let's see, they follow the same pattern, right? Gold's a little different, but let's go ahead and we can add gold and compare that. XAUUSD is a ticker symbol. We add that, and we can see that gold, this is gold. And it is moving the same direction as the indices as well, okay? And we'll talk more about that later on, right? So this is a comparative, this is what we call a positive correlation. Positive correlation. These markets are positively correlated. So if I go long S&P and long NASDAQ and long Aussie dollar, long Kiwi dollar, and long euro. I'm not diversified. I am long, we call long risk. I am long. I'm just giving you a little lesson here, right? Risk, this is risk on. Okay, risk on. So I'm long risk. I'm willing to take a risk. Now, if I'm long dollar, I'm risk off. I'm risk averse, right? If I'm long yen or long Swiss franc, then I am looking for a flight to quality, a flight to safety, right? And that's called risk off, right? This is a risk on. This is what risk on looks like. And typically, if you go back, to any to any of the if you go back years, you'll see, look, October risk on, and then look, selling in the week when December drops, right? Look, October risk on, and then look, October risk on, right? Anyway, so I hope that was useful, helpful. Let me know in the chat box if that was, right? So again, this is the British pound, and I'll just go ahead and go through. We do have some AUD USD data coming out as well. We crushed, absolutely crushed we absolutely crushed this thing, what we call it, Kiwi dollar, right? Yeah, we just annihilated. We had our Aussie CAD, we kind of lost a little bit, $115, and we lost a little on the JPN 225, lost $19. But we just totally spanked Kiwi dollar. And gold, we just loved some gold, XAU USD, right? And so we were able to pull out a goodly amount of $1,000 in gold this week, which is pretty good. Okay. And again, if you want to learn more about how we do that, then you can go over to elitetradersuniversity.com, and then you can take advantage of our resources there. elitetradersuniversity.com. We have a free masterclass, a free ebook. We can also apply for a free strategy call to see if working with us is a good fit. Okay. Anyway, back to the charts. Okay. This is what we did with so bulls versus bears. I am bullish Aussie dollar. Short-term bearish, short-term like maybe a day bearish, but the rest of the week we're looking at a bullish move in the USD. And you might get a little trepidation going into the FOMC minutes. And this is where we took where we rode this really nice move in the Kiwi dollar, where it just kept on giving he had a low of 58.54 and got up to 60, almost a 100 pip move in just a matter of a few days. Okay, so nice move off the bottom, off the low, right? And we got trend line break, color change, and that we were able to take lots and lots and lots of trades in that. And because it's a risk on currency and it's November season, we have a seasonal advantage. Seasonalities are very important. A lot of people talk about technicals and fundamentals, but people don't talk about seasonalities, because you have to be old to know about seasonality unless you study this stuff. And since I lived through so many seasons, I've seen this stuff, right? So that's how we learn about seasonalities. Okay. So Kiwi dollar looking at continued move higher. Like I said, we can see some type of a pullback, but we can see nice move higher, maybe back up to this 60.54 area in a matter of just maybe several days. Okay. Let's go ahead and look at we looked at the USD JPY, just very, it's kind of an oddball. It's a major currency pair, but look at, it's acting totally unusual. Usually we have, yeah, it's been, every year in October, November, October, we see big moves up. And right now, see, we're coming against what we call a double top, rejection at 51.95. Price doesn't seem like it wants to go past that area on the weekly chart. You can see it's forming what we call a double top pattern. And so it's very risky to try to short this here at this area. Be careful. The Bank of Japan, typical target would be down here for the M pattern is what we're typically look for. But let's drop down to a lower time frame. Maybe drop down to a daily, see what's going on there. You can see we're getting some rejection candles there. We're still in an uptrend though, right? Structurally, we still have this uptrend, and this could just be a pullback in the direction of the trend. And the Bank of Japan to get everybody on the short side. And then they jack it up. See how they did it here? Oh, look, it's dropping, and then boom, right? And so they just allow people to stop themselves out to do the heavy lifting for them, right? So I would watch this. We get a break of 51.11. I might go long. Because why? The treasure friend till it ends, and I'm looking for a green candle break for a move higher back toward maybe 152. All right, so bulls versus bears. I'm actually constructively bullish on this. Short-term bearish. This may be like a little ABC correction against a trend, and then we'll actually look for a retrace off that low and maybe back up to this high, right? So I would just wait for maybe a break of 49.96 and be ready for that baby. Okay. Let's take a look at USD CAD. I think we have a lot of Canadian data coming out. USD CAD, that's the US dollar versus Canadian dollar. And we had rejection after this double top right there. We pinned that baby, bam, took that south side. Congratulations to our traders that took that. Looking for a weekly. Again, you have this higher, you have the downward move of the dollar index, right? Which was probably that move right there, right? That wick. And we've got this topping area where you're just seeing lots of topping action, almost like a zone of bearishness here, right? Make this red or reddish. So we just rally into this area, Again, we have an uptrend, right? A pullback to a trend line, higher highs and higher lows. I'm really constructively, short-term bearish, medium-term bullish. We haven't really made a lower low or lower high. And just because we have this multiple top. Now, if we get a break below the trend line, that'll be a confirmation. Probably like 136.50 if we could break that. But just be careful. Wait for confirmation. Because if you don't wait, it may just go up, right? Dropping down on a daily chart. And you can see we've got this almost like a pseudo double bottom right there. And or got a green candle out there. So they might try to push this up one last time to 38.59, maybe a pump and dump. That could possibly be what the market makers are looking for. It's very important to think in terms like a market maker, like how can I make the most people lose? Should be your, like this is like defense wins championships, right? So playing defense, like how could I make, if I were a market maker, what would I do to make somebody lose, right? So you would think about that. We think about the news, look at sentiment, see where people are located, and they may all think all the dollars dead. Look, it just broke out, and everyone's shorting the dollar, and then you go in there and boom, it goes the other way, right? Because you have all these people short. And so that's fat money, right? That stop, all those stops above the swing high is liquidity and money. and those guys could sit up a long wick and knock that stuff out. Well, look, you can enter on that candle. You maybe go back down to maybe a 4 hour, right? And look for some type of an entry above a high where people are looking to get short, and this may go up, right? So trying to figure out where people are most likely to be in this market. And so we have structurally, we have a lower high, but we have a higher low. So this is just a triangle, and triangles usually mean indecision. And this is really not, when you have indecision, I don't like puzzles. I tell my students, I don't like puzzles. I don't like crossword puzzle. Well, puzzles are supposed to solve, help you. It's like, no, I do other things. I'll read a book. I don't need a puzzle, right? So I'll find something else. So if I'm looking to trade the Canada trade, I might look at CADJPY. I might find something else that's a little bit more easy. Oh, that's a new one. CAS, Casper the Ghost versus JPY. There we go. This is not much help, much more help. we've got a very stuck in a very big range on the daily chart. I mean, that doesn't really give us a whole lot there. Anyway, when we look at CADCHF and then try that. And this, see, now you have trend lower highs, lower swing highs, and lower swing lows. And the Swiss franc is totally kicking the Canadian dollar's butt right now. However, we are at a significant area of support. And we'll see if that the Canada data drives us lower, or we actually benefit where we see price break out and go north, right? So, but it seems like it moves sideways and drops, sideways and drops, sideways and drops. So maybe we see a drop here and we keep going in the direction of the trend and heading down. So that data that we're coming out with on this week could send this even lower, right? We haven't been this low like ever, like ever. Like you go out maybe ever, like when you start getting into like 30-year lows. I mean, we got the dinosaur. I mean, look, Jurassic Classic here. You got a dinosaur down there. We've never been this low before. Sometimes when we get to these lows where we've never been before, and we might actually see buyers step in, right? And so we might see all-time lows, and then we get these big shoot up. Every time we've come down this area, we had these big shoots, big price moves to the top side. So you may want to like drop down to that lower time frame chart, look for a trend line break, and maybe this gives you another shoot up here, right? Break of 64.75, and this thing can go to the moon, right? And your risk be very small. You say, well, Greg, I don't know about this. Well, look, your risk is right there. And again, it's educational purposes only. And then, boom, you got almost a 7-to-1 risk to reward, right? Always straight up to stop, and make sure that you position size based on your account. Okay, don't trade more than you can afford to lose. Okay, so let's go ahead and look at some of the indices. Let's look at the NASDAQ, NAS 100, US Tech, higher highs, higher lows. Look at that, just ballistic move to the north side. So exciting, right? I'm making myself yawn, right? Oh, you're boring. It's like, oh yeah. Anyway, look. So here we go. We after that pullback we had, and then now we're just launching up. We got 16,752. We continue to rise. We had a pullback, trend line break. The only thing that concerns me about this break that we had is that it wicked up and pulled back down. That's a monthly chart. Let's bring it down to weekly, and there you go. That's more like it. And we can see nice flag breakout, beautiful flag breakout. All you guys who wrote this out. Look at that. That's textbook, right? And if you took the flagpole and projected up, it gets pretty, could be pretty nifty, right? So you take that and you project that from the breakout point, it gets pretty, it gets pretty. Don't think we get that. I think at least to 1652. Bulls versus bears. I am bullish Nasdaq. Go Nas. Go Nas. It's not your birthday. Go Nas. Right. Let's look at SPX 500. I was looking at the CFD contract, but easier. And we can see, look at that, straight candles, higher highs and higher lows. So I was talking to a friend, and he's an artist here in Vegas. And he's like saying, I got this Robinhood thing. And I said, and he says, wow, I'll learn how to trade. I'm like going, sometimes you can look at people and you're like, you really shouldn't trade. I have a better idea. Just look. What I would do if I were you, not that I'm making any suggestions, I said, just buy the index. These guys are already managing it. They know what they want in it, and it looks like it's going to go here. And so hopefully put more than $5 into it. But anyway, it was my friendly tip. And I throw tips like that all day long in my coaching class. And a lot of my students, they actually throw bones at me. That's what's really cool. There's one of them here. No, he's not, right? Our winner's circle is where all my, these are my top students. And they are, and Jamie just is actually, he's saying hi. He's a Bulls versus Bears. Nice. There he is. So he must be in the chat room there or something like that. What if I click the link? Okay, let's go there. And I don't know if there's anyone. Oh yeah, Cut the Roop is there. Yes, there he is. Whoop whoop. And Lewis is there too. Hey, how you doing, guys? These are some of my top students. Master Trader Cut the Rope. He is going to be doing our live trading room. And so that's going to be rolled out to you guys for a low price of $127 a month. And you'll probably make more than that in just a few days of training. I personally trained him, and he is one of the best guys. And then Lewis training him up too, doing the London session. So we've got Asia. I cover Asia. He covers the New York session. Hey, there you go. He says, hey. Awesome. So that's my crew, guys. And so they throw me bones too. Look, they throw charts and things like this all day long, right? Because they learned how to fish. But many of you, if you don't know how to fish, or you just need some signals or something like that, then you should sign up for Pip N Run Live. And I'll put a link in the chat box for you to actually to go ahead and do that. And I can find it because I am such a cool dude. This is where we're going to go here. And then we're going to go up here. And I'll copy the link. And if you want to join, I'm going to put the link right in the chat box. Join Pip and Run Live. We have 3 days of great trading with Master Trader Cut the Rope, aka Jamie Rogers. Okay, there's my shameless plug. No, and let me get rid of this. I don't know what this is. Reading mode. Okay, but moving right along. S&P 500 higher highs and higher lows. We're looking at 46.11. A nice little breakout from a drop down to a low. We got down to 409.568. And looking at if you put a Fibonacci from our swing low that we had back on October 13th, right on my birthday, the day after my birthday, really. And then we can see that we bounced right on the 38% retracement at 4,176.83. And we can see that we have a reversal turnabout right there. I'm we could see that was coming, right? Saw that coming. And then if you're riding this out, hey, that way you can buy that GI Joe, the Kung Fu grip that Eddie Murphy talks about in Trading Places, guys. Okay, moving right along, we got S&P 500 looking good. Let's go to the gold. Okay, this is what we have the Gold Rush course, the Gold Rush profit system. Our founders are already in place, and it's all sold out, already oversubscribed. Not sure if we're going to have any more spaces left. For those of you who did sign up, remember tomorrow, Saturday at 12 p.m. ET, that's 12 noon, we will be doing a meetup online on Zoom. Be there or be square. Make sure you check your email box for the invitation link. Make sure you check your spam box. Make sure you check your inboxes to make your junk mail boxes to make sure that it didn't go there, because the invitation has gone out for the it'll be on Facebook. It'll be a Facebook Live, and so I'll be talking about the London fix and how they fix gold, right? And how we really, we crushed gold and made a goodly $1,000, which is a pretty good, right? So let's go ahead. Let's start with gold, XAU USD. I'm going to remove all the drawings, and again, glad to see the guys online watching. They're the best students and they're the best traders because they watch bulls versus bears, and I want to thank you guys for supporting bulls versus bears. So here's our gold, and then we have so structurally we've touched this $2,000 high. We pulled back and then we rallied back to 2,000 again. But look, we're making higher highs. We haven't higher lows. We've got these higher lows. We haven't made a higher high yet, so it's gonna be kind of interesting, right? Because now we have almost like we have a head and shoulders. We have a shoulder, head, shoulder here, or do we take the high out? That's going to be very interesting. We got the weekly chart up, right? We're going to walk this down to a daily chart, and we can see that we're just kind of meandering around, and gold will meander sideways for a bit, and then we'll break out. You can see nice bit of support, 1813.46. We got a bottom put in right there in October 9th. And we're making some higher highs and higher lows within the channel, right? Just higher highs, higher lows. And but we're looking at resistance at 2034. We did have a reversal turnabout or pivot at the 38% retracement. 38% retracement came in at 1931.22, and we hit that in the November 10th, November 10th area, right? So we're looking for price maybe to reach sometime back to the 2006 area, and maybe if we break out, we can get to like 2034 on gold. But there's a lot of overhead resistance here that has to be cleaned out, and I don't know we're going to be able to clean it out on low volume and a holiday, right? And so we might get another shot into that supply zone there before maybe coming back down and trying again, maybe basing out back here. So I'm short-term bearish, but intermediate term bearish, bullish, right? I think we get a little pullback. We get Monday pullback, right? Manic Monday pullback, but then I think we again go up toward trying to take these highs out, hit that 2,000 area out, right? Drop down to a 4-hour chart. We can see that we pulled back, and now we are on a very kind of like a creeping uptrend, right? Higher highs and higher lows, right? Haven't broken structure. As long as we can hold above 1934, we're good to go toward 2,000. Ring the bell. Woot woot. All right. And let us go on to keep on going, keep on moving. We looked at gold. I'm going to look at Bitcoin, BTC, USD, right? I remember polling my students, and I said, would you rather have $10,000 in gold or $10,000 in Bitcoin? And all of them took $10,000 in gold. And then we can see, here's our flag pattern I drew out a while back, right? Here's our flagpole, here's a break, and then we broke out above the high. We hit the first Fibonacci target, 35,499, took it out nicely. The 100% expansion takes us out to 41,968. And so as the US dollar, remember, we price Bitcoin in terms of US dollars. As the dollar decreases in value, Bitcoin rises in value, right? And so nice clean chart. We can come back and retrace, we're going to run into some congestion, lots of wicks and congestion in this area here. We usually have a 100% expansion target. AB equals CD takes us to this level here, 41,968. So that is something that we can look for. Bitcoin is on the move. Again, when the dollar sells off, people are trying to find other assets that to maintain. Either they're buying real estate, they're buying other things to try to not lose value, right? As we have inflation, the value of your currency starts to drop. So moving money into higher yielding assets is a way to hedge against inflation, like gold. Okay. All right, guys. I hope you enjoyed this. Bulls versus Bears. Make sure you put your comments in the chat box. Make sure you tell a friend, share, drop this link, and subscribe, and tell a friend and share it. And I look forward to seeing you very, very soon on the other side. Remember, we have the gold seminar meetup. Go for the gold coming up at noon in the should be at the Forex Cash Machine group. Okay. Talk to you later. Peace and pips. Greg McLeod signing out.